Okay, so Honey Badger Silver, ticker TUF, forward-looking statement. So first things first, Honey Badger is a somewhat different kind of company than many of the others that have been in the exploration resource track. It's more of a financial company. It's a silver acquisition and roll-up company. Also, we're quite new. We've been in business for a little bit over a year, and in that time, we acquired the shell, which is Honey Badger. Ticker TUF was pre-existing, but it's basically acquired the shell, an excellent virtual management team based in Toronto and elsewhere in Canada, and have put about 5 to 6 properties in the company so far. And there's several others that we're fairly close on, just kind of working through commercial terms. So the idea was really sparked by Chad Williams, our founder and chairman, Brian and myself. We felt very strongly and continue to that about a year and a half ago was an excellent time to invest in silver. We believe that it's the ultimate green metal. We believe it's underpriced. We believe it's cheap. It's a great time to invest in silver. We continue to believe that. And we also believe that it's a great time to invest in some smaller, orphaned, unloved, though high-grade properties. There's a great bifurcation in the mineral property market, as many of you are probably aware. The larger companies have done quite well, particularly this year. But the junior sector has really been starved of capital since well before COVID. And as a result, there are a lot of good properties out there with identified resources, strong mineralization, dormant, kind of in idle hands, and that's our playing field. So our goal is to build on our high-quality asset base. All the assets are former producers, Yukon, Thunder Bay. It's a 3-tiered portfolio of assets. The top tier we'll keep ourselves. We'll drill, we'll explore, we'll develop, we'll advance. Tier 2 in the middle is effectively projects to be farmed out to other mining companies using the balance sheets, capabilities of others. And then we have some that honestly are acquired very inexpensively. We'll kind of sit in inventory at the bottom, not unlike a land bank or a holding company. So the objective is to purchase some of these assets very, very inexpensively. For example, we've recently purchased the in-ground silver. I don't know if I call them formal 43101 resources for 4 cents an ounce. Okay. Well, on the May 2nd BMO silver pages, the enterprise value for M&I mineralization for silver producers, $10.60. Now, we're not pretending to, nor representing, we're going to make 260 times on the money, but that is the gap of valuation. Obviously, a lot of that will be filled by capital spending, foreign and real companies, folks farming into these assets and doing the work. So this has to be value for everyone. But essentially, that's what we're looking at. That's how cheap some of these assets are, and the going rate is what the going rate is. At the same time, as these mature, the objective is to create additional vehicles. We may spin out base metals or precious metals royalties, as the case may be. So why is this? That's very nice to say, but why does it matter? And here's why it matters. We at Honey Badger have superior deal flow. We have superior deal flow to just about anybody in the mining business, except for maybe the big royalty companies, Franco-Nevada, Royal Gold, et cetera. Why is that? That's because our founder, Chad Williams, is the chairman of Red Cloud Financial Services. You may have heard of. It's a mid-tier investment bank in Canada. Over the last year and a half, they've raised $1.9 billion in 230 different financings in the resource space. They're ranked number 4th, but really it's 70 deals, 50, 50, and 48. They're tied for second as the largest originator of mining finance in Canada for a company that's only 7 years old. So that's our chairman and founder. Also our major shareholder, Eric Sprott, about 15%. Is very close to the company. So between those two gentlemen, we have access to deals earlier than a lot of people that see them. And in many cases, we have exclusivity, logistical or financial advantages. So that's really what we're all about. We believe that we're trying to monetize what we regard as superior deal flow with constant screening and negotiation process, track record of creating significant value. That's the Red Cloud. Also, Chad founded Victoria Gold, which slipped out of his control, but that's better than 100,000 ounce a year producer with a 700 million market cap as we sit. So this is about the 3rd or 4th time around. We're pretty excited about it. We're just getting started. These are the 4 or 5 properties. We'll really get into all the details. The one at the top, Clear Lake, was recently acquired. Plata, the second one, very, very high grade out in the middle of Yukon. We'll get into some of those numbers And one of the most remarkable things about Plata is that in the 1970s and 80s, it was put into production by long since failed companies or extinct companies. But they cruise on the ground all the way in Yukon seasonally. They more or less hand or semi-mechanically mined material, hauled it down the hill on their backs, put it into sacks, flew it by fixed-wing aircraft to Whitehorse, where it was put on trucks and sent to the Tech Trail smelter. And they still made money. So it was pretty remarkable. And a number of those bags and samples were still available on site. And, of course, they don't really the grades aren't representative of the whole deposits because they were very much selectively sampled by those that picked them. But the silver grades are multi-thousand grams per ton, if that means anything, which is really some of it's equivalent to many ounces per ton of material. We're not pretending the whole deposit has that, but it's quite remarkable. And there's more. It has 32 different showings and also has a quite broad and untested base metal, zinc, and lead geochem anomalies, which are very strong. So it is it's a large property. It is intensely mineralized, and we're working on it and potentially bringing in partners. There's the team upper left. That's Chad Williams we described. The rest of us good-looking fellows. Here's some capitalization figures that you could pull off anywhere, but it's roughly an 18 million Canadian market cap, 177 million, better than 200 million shares fully diluted. So I guess here we switch a little bit to our views on silver. We believe that silver is the ultimate green metal, along with copper, nickel, and cobalt, but probably in some ways even more so in an underappreciated way. Silver is elementally superior. It is the best conductor of electricity among all elements. It is the best conductor of heat among all elements, and is the best reflector of light in the visible wavelength. So fairly remarkable applications and uses. Better than 50% of silver demand is in various forms of electronics. Some of those are growing quite rapidly, such as photovoltaic cells, where it's using the paste on the back and some of the connectors, and also in EVs, which basically have roughly about 2 ounces per vehicle compared to about a half for a regular vehicle. So we believe silver is an ultimate green metal. It's critical. Has the benefits of precious metals attributes as well. It'll follow gold. Gold-silver ratio, of course, is elevated now at about 80 because gold is taking the lead. There's concerns about liquidity in the financial system, et cetera. However, it's worth bearing in mind that there's never been a sustained gold rally that was not accompanied by a decline in the gold-silver rally. So turning that around, if the ratio, so if the gold-silver ratio doesn't go down, your gold rally probably won't last. We believe the ratio fair value is somewhat lower than it is at 80. Remember, a year or two ago, when we were terrified, when the system was really terrified, the gold-silver ratio was over 100. So at any rate, so we believe very much that silver combines the best of precious and base metals. And the fact of the matter is that it's chemically sticky, so whenever we get silver, we tend to have a fair bit of lead and zinc, if not copper, that goes along with it. These are some kind of busy slides. I don't know that we need to get into too much, but this is kind of interesting. This is supply. There's demand before investment. The red is investment. And this is tricky because it didn't really go down so much. That means it's 150 million ounces per year. So if we showed the aggregate ETF and ETB holdings, this red, it would be up to 1.1 billion ounces just per year. The way it works is the silver market's pretty simple. It's about 1 billion ounces a year. 800 comes from mines, 200 from scrap. On the demand side, it's about 500 million for industrial uses, 200 for jewelry and silverware, and about another 300 million for bar and coin. So the point is that any time this ETP line is above about 100 million ounces per year, the silver price really responds because there's a shortage of metal and it needs to be drawn out of inventories. We can also see this here. Now, we have to be very careful with conversation silver market balances. You go to the Silver Institute or CPM Group or Thomson Reuters. Everyone's got a different set of figures. The point is that we tend to include bar and coin in it, and we see a deficit the last 3 years, our interpretation of the numbers, after the exchange-traded products are included. So that's another way of saying that investment demand, which has been solid, it's been positive. Investment demand sets the price. When investment demand is up, silver price goes up. Investment demand goes down. And we have seen years in the past when metal did get flushed out of both the gold and silver ETFs, and prices will tumble then. We see it, but we see it very well positioned for that to continue. It's just another slide sort of illustrating the many places in the automobile, just for example, where silver is found. And it's basically any electronic component, anything connected to a switch, anything connected to a wiring harness, anywhere in the vehicle, EV or not, has its, the instrument cluster, adaptive cruise control back here, security systems, any electronics in the vehicle. They all contain kind of go through micron films of silver at the connector level. And that's basically that penetration of electronics within the vehicle, as well as the growing market share of EVs, is what is taking automotive demand kind of from this historic 50 range, 50 million ounces where it was stuck, and it's probably going to go to 80 or so. So it doesn't change things. It's not transformational. Neither really are the photovoltaic cells. It is part of the whole electronics demand regime. The point is there's more solar cells, but there's pretty aggressive thrifting in terms of how much silver is on each cell. So net, that number has been around 90 or so per year. But anyway, so it's just an illustration of the many places where we kind of touch silver every day. It's pretty remarkable. This gets into our Clear Lake project. This is one that was acquired a few weeks ago, 250,000 Canadian. This is the one that's roughly 4 cents an ounce, although I want to be clear that the 5 million ounces in here are not 43,101. Another way to look at this Clear Lake is it has so much zinc in it, and really at this point, zinc is no longer a 4-letter word. It's been as high as $1.90 a pound. And so at anything approaching current metals prices, this material is roughly $300 rock, $320 per ton rock. And if we adjust for metallurgical recoveries and also the smelter penalties, which are very, very high on zinc compared to some of the other metals, even normalizing the economics, it's an open pit, low strip, and the economics of this actually are somewhat comparable to something like a 4 to 5 gram open pit gold deposit, or about 2.2% copper. And again, adjusting for the smelters and whatnot. This is the Plata property we were talking about earlier, the one with the 22 different showings, and the extremely high-grade material that was manually mined and flown south. So again, dozens of showings from past exploration, extremely high grade, several types of mineralization. We're very excited about this one. This probably falls into our tier 1 that we'll hold for some time and do the work on ourselves. We had a field project on it last summer. Hopefully more to come this. And I won't belabor all these fine points, but the point is these fine numbers. These gram per ton, so they're very high. We're not representing that we would duplicate these in drill holes, or that these are representative of any broad mineralization. They're just samples. They're just channel samples. They're from the 90 historic ore bags. 5,100, almost 5,200 grams for silver. I mean, that's somewhere around. It's tens of ounces of gold. Again, we're not pretending the whole deposit is of this nature, but again, these are just several of the zones that have been identified, and not including those base metal geochem anomalies. And then there's this Groundhog property, a little bit earlier stage, good showings, up to 3% copper in some of it, road accessible. That's quite nice. And then Chad founded the company based on a series of properties in Thunder Bay, which had historic production way back when. These are probably lower in our priority stack. These are probably held in inventory, potentially more valuable when silver prices are higher. This is just a summary of what we're at. It's a strategic investment in silver. It's a little bit different vehicle. So again, a roll-up company somewhere between a holding company and a land bank. The kind of company that would be fairly well suited to some of the parts analysis as opposed to NPV analysis. A very high leverage to silver in these assets. So we're creating this vehicle. We've been at it for just about a year. We've got a couple other things coming along. Market cap is low. Cash is pretty thin at about $1 million. We'll probably raise money, but each time we raise money in the future, it will be associated with it. It will be for the purpose of adding another property. We've got another couple that we can reach terms, so we believe that they'll be quite those transactions will be quite financeable, and we're looking forward to bringing that news to the market. So I guess it went fairly quickly, but it's late in the day. No sense dragging it out, ladies and gentlemen. If I can answer any questions from the commodity standpoint, and we also have a real mine operator, mine builder in the audience here, Brian Briggs, to add some color to the numbers if you like, and that's it.
Thank you, John. Thank you. Questions to the back? Yes.
Please.
So, do you have a plan in
Well, we're Well, I'm trade. I guess it would be on the TSX. It's not in the immediate future, but yeah, the objective of this company is to be an acquisition and roll-up company. We can tackle assets significantly larger than we are just because of our shareholders and our access to capital. So should that occur, we will have to graduate at some point. To tell you the truth, at this point, we've really just been focused on getting our hands on these assets, and we've been most afraid that silver was going to run away. Ha ha. That hasn't occurred. But at the same time, the base metals have been very strong, and that does not make negotiating any easier. So we're kind of in this window. I would say maybe a year from now, or 2 years from now, it would be on the radar. Sir.
So my question is, I get the idea of the roll-up.
Yeah.
Buying these properties under the market at a discount. What's your exit strategy? Like, who would get to that exit strategy? Maybe I missed it, but what are your intentions to develop these properties, if any? And furthermore, if that's the case, are you looking to increase the value of what you're rolling up, or is it just to hold them as they are with high price going up? You have an exit strategy based on the sale of those resources.
Yeah. Well, let's start with that's a lot. They're very insightful. Those are very important questions. These assets in our mind fall into three categories. The best ones we want to hold on to, drill, work, and advance ourselves. The medium we want to farm out to others, such as we can, and the bottom ones are probably in inventory. Within the ones we've shown you here, Plata, we would probably hold and keep just because the grades are so high and there's so much untested stuff. We did one field program. That's one we would probably advance ourselves in the near term. Clear Lake, the one with a lot of the zinc and the high rock value, that's one that probably falls into the farm in, farm out category. And then Thunder Bay probably falls into the a little bit more of a kind of held in inventory, didn't pay much for it. Maybe it'll have some value at a higher commodity price. We're really not spending money. We're not spending time. It just kind of exists in the holdings. In terms of an exit strategy, I don't know how well you know Chad Williams. He's a really remarkable entrepreneur. He's filled with all kinds of thoughts 24/7, and we're constantly having to Brian and I are running around and filling in the details, just trying to keep up, essentially. I would say at this point, he is very focused on, first and foremost, aggregating these assets. Second of all, spinning out the base metals, spinning out, creative vehicles as he can, and potentially retaining NPIs and royalties. So I think that's as far as he's probably gone with the logic in terms of the sale of the company or like a real exit. We're more, it's kind of a hobby company. We started it recently and we're still kind of having fun with it. So we're not really sure what the exit is. But I suspect that it will involve spin outs of base or precious metals royalties to the shareholders. So it's not an exit, but it's probably where it's headed. Sir.
Piggyback on this question. How do you see mineral rights affecting the acquisition and exit strategy around these properties?
Well, that's a great question. Brian, mineral rights? The question.
How do mineral rights affect the acquisition and sell out strategy of the portfolio? I'm not really sure what you're asking. Mineral rights on the properties, do they affect? Is there a monetary value now that we expect to change? Is there rights that are proprietary that are have? Are there certain minerals that are others that are outside properties not? Sorry, moving on to thoughts.
No, it's fine. Look, these are 100% owned. Okay, they're 100% owned. They're not options.
Yeah, I understand.
Right.
You own all the mineral rights.
On the mineral rights and the services, you certainly have to negotiate with the native corporate.
Based on those rights, do we think there's geological findings under there?
Absolutely. Yeah, well, that's what we're attempting. I mean, we've got indications of grade, both on Plata and Clear Lake. Frankly, what we're looking for is more tonnage, because we have these, only in Clear Lake we've only tested 4 or 5 out of the 22 zones, and neither are the base metal anomalies. So we have a fair bit of work to do on those. That's really how we're going about it. In terms of mineral rights and mineral tenure, probably the biggest, maybe if that's what you're trying to probably ask, and it's really the question you ask these days. Probably the most critical gatekeeper in the area of these is going to be the native corporations that operate in these specific districts in Canada. The native corporations tend to be very sophisticated business people in terms of anything with fish, forestry, or mining. They know what things are worth, et cetera. And those will much be our partners in terms of any kind of construction, getting roads in, site services, et cetera. And I think anybody else who worked in Canada would tell you the same thing. And they would not tell you it's easy either. They would say that at this point, it's very hard to get things moving. So, yeah, sir.
Questions.
Sure. Right. Yeah, fair enough. Yeah. Look, these properties are fairly early stage. They've all had past production, but they do not have a reportable 43-101 resources on them. Okay, they have past production. They have identified stuff, but these have been sitting dormant, and that's the reason they can be purchased for a few $100,000 rather than tens of millions. In terms of the grades, these are mostly surface mines with the exception of Thunder Bay, and those underground workings are so old and flooded, I don't think anyone really would want to go in them. So the Yukon stuff is all open pit. And our slides did contain a bunch of grades from intercepts and trenching and whatnot, but they're selectively chosen. They're very high. And again, as I said in the presentation, I wouldn't really hold them to be representative. The point is each of these properties have very, very high, demonstrated very high grade occurrences that, and we believe the geochemistry, the envelope, as such, the mineralized envelope should be pretty good sized. But again, this is early days on this stuff. They're not a great answer, but I'm just being straightforward. It's early days. In the back.
So the company specifically focused in the Yukon, and if so, why?
No, it's been Canadian so far. We got Thunder Bay.
I thought I heard you say it's not.
Well, no, but the key, like Clear Lake and Plata are in the Yukon, but we're fairly close on some assets, both in the United States and in Latin America, just getting through commercial terms. Maybe we'll get there, maybe we won't. So it's not Yukon focused, but we do believe the Yukon's a great place to work, and that's where our chairman built the Eagle Mine, which is now Victoria. So we have some domain expertise, and as well as our third board member, Doug Eaton, runs a geologic consulting firm. Is specifically focused on the Yukon, has deep experience. Sir.
So just to put it in perspective, so what they're saying is historically you do have grades, but because they're not NI 43,
Yeah.
You're not at liberty to.
Well, I mean, I am, but they're just so insanely high. I mean, this is the composite grab samples from the 9 historic ore bags that they didn't put on the fixed wing aircraft. Now, granted, guys went in the vein and picked the best stuff. It's not representative of what you get in broader, but this represents 5,100 grams. It's a silly grade. Wait, doesn't even mean anything. That's 60/80 ratio. That's 60 ounces of gold. Yeah, right. And there's some channel samples as well. Let's get some rock samples, or let's get some channel samples results somewhere. Oh yeah, this one here. Excuse me? No, not since the 60s and 70s. We just got this thing last year, and it's like seasonal access, and we have to negotiate with the natives to road access, exactly the procedures to drill them. So, but that's our plan. This is one that we want to hold and do something with, unless somebody persuades us to do otherwise, and for obvious reasons.
So my point was that drilling that's being done overseas, NI 43-101. So
Yeah. That's why I'm saying, look, these are interesting, highly mineralized occurrences. Okay, but they all have past production, and when prices were low, so there's merit. But no, they don't meet those categorizations, or we wouldn't pretend to. There's no way to fudge it either. The drill hole collars don't exist. The QA QC on all the samples doesn't exist. Stuff is decrepitated and oxidized over time. It's wholly inappropriate to take stuff that old and really try to extrapolate anything other than you can walk out there and you'd have to be blind not to pick up mineralization off the ground. You'd stub your toe on it or freeze to death, one or the other. But okay, sorry. Yes, Laura.
Yeah. So I think that Shaq is very gratuitous in picking up properties on cheap during times where people were looking to dump very good property, not really recognizing the value in the future, number one, and where he's keeping it now in the portfolio. And I just would like John to please comment on exactly his thoughts on doing the JV on some of the properties, because I think that may also clear up some of the questions that were asked about, drilling, and what a nice position Honey Badger is in letting somebody else do the hard work.
Sure.
As far as drilling goes, Honey Badger isn't going to have to make any monetary investment in that.
Well, you described very well our kind of tier 2 properties, which we hope to farm out, and people have our phone numbers, and we're approached. Honestly, recently, the market for these properties is bad enough that there's more for sale than there are interested buyers. So we've been kind of focused on aggregating assets, but our intention is to take that mid-tier, such as the Clear Lake, let's say, and to farm such a property out. That's exactly right. To utilize the capabilities of others, and our 100% interest through that process gets diluted down, and for that tier 2 collection of assets, we're happy being diluted down to 5 or 10% net profits interest over time, or a conventional royalty, 1%, 2%, something of that nature. So again, tier 1 we're going to hold and drill ourselves. Tier 2 we're going to farm out. Tier 3 just kind of lingers in inventory.
Well, the US properties are also.
Excuse me?
US properties are
Well, we're not claiming any U.S. properties at the point. We're active in the U.S. We'll continue evaluation and negotiating process, but there's no U.S. properties in this presentation at this point. Yeah. Yeah.
All right, guys. Well, we will not keep you from cocktail hour. John, thank you very much for the presentation.
Thanks, Ed.